Welcome to Market Overtime on the Schwab Network. I'm Oliver Renick. Today we've got a really fun conversation that traders and investors are going to love. We're going to talk trading, but in a different realm, the trading of everything. That's the business of Kalshi, an online website and the first legal prediction market. Joining me, the CEO and co-founder of Kalshi, Tarek Mansour, is here with us in Chicago. Tarek, great to meet you, and thanks for being here.
Well, thanks for having me. I'm very excited about today.
Tell me about Kalshi. You just told me what it means. It's Arabic for everything.
Yes.
Very cool. So how'd you build this, and how did you kind of rise, it seems, to the top as the first CFTC approved platform for basically anything you can think of?
Yeah, absolutely. Well, again, thanks for having me. I'm excited to talk about Kalshi today. So maybe let me give you a little bit of history around the company and how it got started. So I went to MIT, same thing with my co-founder, Luana, and that's where we started the product, the exchange. And we spent a lot of time in finance. I worked at Goldman Sachs, I worked at Citadel, Luana worked at Bridgewater, and we've observed something very common across all these places is that investors, oftentimes they trade because they have an opinion about the future. They have a view on the future event and what's going to happen. And I'll give you a very specific example. In 2016, Brexit was looming. And I was at Goldman, and all of our clients, it was high net worth individuals, hedge funds, traders, sophisticated institutions, corporations. They were coming to us, and a vast majority of flow was like, "Hey, we are worried about Brexit. We want to get exposure to it, or hedge our exposure to Brexit."
But how?
Right? And so what we would do is actually, we were sitting at that desk at Goldman, and we would structure these bundles, these very complicated bundles, things, stocks, options, swaps, all these, put all these together, and offer it to them as a good position for people that cared about Brexit. But there were issues with that. One, it was a proxy. It wasn't exactly what they were looking for. It wasn't direct. They could often be right, but the position would move wrong, in the wrong direction.
The things they think are supposed to move don't.
Exactly. You're right about the event itself, but you're wrong about the market reaction to it. Two, it was expensive. It was what we call over-the-counter product. There's no exchange for it. And so we charge exorbitant fees. And three, it's not accessible, right? If you're an average American, you cannot go to Goldman Sachs and ask them to structure a product for you. You got to have probably a $30 million net worth or above or other. And so we thought, well, we're doing something weird here. We're using traditional assets to get exposure to something that actually seems to be very meaningful, like Brexit. What if we created an exchange, a marketplace, like the New York Stock Exchange or the CME, where people can trade directly on events, right? Instead of trading on stocks, instead of trading on something that's underlying as a company or something where the underlying is a metal, or a tangible commodity. What if we expanded the definition of a financial instrument to include anything that has economic and social value? And that was the genesis of what we have built, which is Kalshi, an exchange where people can trade on anything, can take a position on any event by buying yes and no shares on things like politics, climate, weather, economics, COVID, health, tech, and anything that you can think about.
I definitely want to talk about some of the trading elements, the management, the market structure, how you manage these things, how you build them, some of the math behind it, because the audience of traders loves that. It's also just when you're around traders or you're around speculators, or I play cards, and when you're around people who are in that kind of business, they love to take bets on everything. So I want to get to that. But firstly, the structure of it, first legalized site to do this. How does it differ from something like a Predictive, for example, where that functions kind of a nonprofit? When you say the first legal in your conversation with CFTC, because some of that is still ongoing, you have an open lawsuit with them where you're trying to get permissions for certain types of trades. So take me through kind of the structure and the legalese of it.
Yeah, no, absolutely. This is a very important part of what we've built, and it's kind of a core part of the company. So let me give you a little bit of history. Every single time a new financial instrument came to be, there was a number of regulatory questions on top. And people don't know this. Today we take, for example, grain futures, one of the most boring commodities out there, for granted. But actually in 1905, there's a big Supreme Court decision that followed decades of debate on whether these things should be allowed or not. Because some people were saying, well, there's speculative activity on grain futures, so it shouldn't be allowed. And the Supreme Court at the time in 1905 decided, well, sure, there's speculation, but these markets are very important because they do two things. They allow farmers to hedge, and they allow farmers to forecast the price, to lock in prices, do this thing called price spacing, so that they can manage their inventory and make more informed decisions about their crops. And so that makes it very socially useful. And you got grain futures, and you got metal and oil futures, and then you got interest rate swaps at the turn of the century.
Now lately crypto, the Bitcoin
lately crypto is
kind of seen some of that.
Same thing, right? And event contracts or prediction markets, what we are building, I think have just gone through the same thing. So initially, like a lot of people want to do these things. As you said, this is like massive amount of demand, and
movies, you have whatever your specialty is.
Whatever your specialty, you have a market for anything, like for anyone, based on your interests, etc. But there were there was a few platforms that were doing it like as a non-profit, small scale, just for research purposes, and then you have a few unregulated, players offshore, illegal, etc. What we went when we first got the idea, the story that I was telling you. We're like, okay, we want to do this, and realized it was not allowed by the government. So we spent 3 years and a half working with the CFTC, the Commodities Futures Trading Commission, that regulates all commodities, everything that's not a stock and security, to regulate this product. And we actually did get it regulated. So we got a historic approval in 2020, to list the first, to launch the first regulated exchange. It's called the Designated Contract Market, the DCM. It's the same thing as the CME or ICE.
Got it.
For event contracts, for allowing people to trade directly on events. And so we've been operating the platform. It's fully legal, fully regulated. We have a number of institutional partners coming live. And we've listed, we've listed hundreds of markets now that people are trading actively. It's been amazing.
I think the one that I'm most interested to dive into is Rotten Tomatoes, but there's so many. One that people will notice when you go into politics. There's so many different things you can bet on, Biden versus Trump, but not the actual election outcomes.
Yes.
And that comes to your lawsuit with the CFTC.
Yep.
What is that? How come that's an off-limits thing? Because then take me through it.
Yeah, so
you kind of guess.
The thing I would say with innovation, financial innovation, is like there's always going to be critics, and people that are going to see the pros and cons, and so we have listed markets on pretty much a very large range of topics, and including politics. We have a number of markets on politics. Biden's approval rating, bills passing, TikTok being banned.
Really specific stuff.
And a number of, it's really amazing, and the engagement on that has been incredible. Specifically, the regulator has not let us list a market on the U.S. elections, the outcome of the U.S. elections, Trump v. Biden. And we've been working on it for years now, and they banned us. Well, they prohibited us from doing it. And look, we have an amazing relationship with our regulator, and we've worked with our regulator, on a daily basis, pretty much. And we've, they're diligent, they're doing the right thing, they're trying to do the right thing. But on this specific decision, I think we disagree based on the law, and so we sued the regulator over it to let the court educate and give us a third-party opinion on this decision. And so it's actually. The court hearing is going really well, and the decision is coming in around Labor Day. It looks like. We don't know for sure, but this is our expectation, and we're excited to see where it's going to go. And I think it's very possible it's going to be the first legal market where you can trade directly in the U.S. election, like you trade a stock or trade any other markets.
Is the state's argument that then it could impact election integrity if there's outward money involved? Basically, is that kind of the argument?
Sure. I mean, I think the thing I say to that is, like, first of all, there's a lot of outward money involved in the election already, right?
Sure.
So it's like.
But we don't. It's under the table. We don't talk about it.
Well, under the table is worse than if it's done in a transparent exchange where you can track where the source of fund is. You know your customers. You have their IDs. You identify them. You know where their money's coming from and where it's going and what they're doing. And so what I'm saying is, like, if someone were to actually wanted to do something bad, they would do it under the table. They wouldn't do it on a regulated exchange where everyone can see it.
Right.
On the contrary, what we've seen and the evidence towards is allowing markets like ours, and this is another thing that we haven't discussed. The reason we call these markets prediction markets is because they're predictive of the future, right? So let's ask a question. Will Trump or Biden win the US elections? Or will Brexit happen by the end of the year? When you let people buy and sell these markets, they're trading actively in these markets, you get a price that is the aggregate of what the market believes the forecast is going to be. So let me take a back seat.
Okay.
How do these markets work? So will Brexit happen by the end of the year? You can buy yes and no shares.
Right.
Each yes share will pay out $1 if Brexit happens and $0 if it doesn't, and you can buy at any price in between, right? So let's say you and I, Oliver, we decide to make that trade. I buy at 40 cents the share. So I believe there's a 40% chance, 40% odds that Brexit is going to happen, and you'd be basically selling me at that price. And that price is determined by supply and demand. It's like the stocks or others. There's an order book, people place bids and asks, and they're trading actively, and the price constantly fluctuates based on what people believe. That price is actually a very accurate forecast of the future. And it's better than polls. Polls have become more and more biased over the years. And it's proven empirically that it works. We are actually today the most accurate way, and then this is why a lot of traders and institutions are actually taking our market data and our forecast, because it sees the future, and we're the most accurate place to see Fed interest rates and what Fed policy is going to be, inflation, what it's going to be, climate disasters, hurricanes.
You get better than Fed funds futures?
Than CME, yes. We're better than CME and more accurate.
Really?
Yes.
That's based on what?
The error, there's a lot of analysis and there's a lot of papers about this. Like the error rate for Kalshi is actually lower than CME's by a decent amount, and it works.
How many cuts are they saying right now?
It's incredible. You can see it right now. I think you should check it. I haven't checked. It might be 1 to 2.
Okay.
And you see that
sounds more reasonable already.
That curve, but no, we are more accurate than CME. Historical data shows it. It's very clear.
Over what sample size?
It's been 2 years. I mean, every single
but some big Fed moves in that time. In a market that's been stumped pretty hard according to Fed funds futures.
There's been a lot. It's been a volatile kind of Fed time. So you went through 2022 and all of that. So I think.
Who's your market maker on these trades? How does that work?
So we have a number of market makers, like people that are kind of organically providing liquidity, and we actually recently announced our very large scale partnership with Susquehanna, SIG, the firm that Jeff Yass founded.
Okay.
And they set up a trading desk division to trade on Kalshi and prediction markets, and it's really kind of a big stamp of approval for this asset class. And how it's set to really go mainstream.
One of the things, obviously, on an exchange that's going to have to happen for mainstream is to be able to place big bets, right? As you mentioned earlier, the advantage of having something like this instead of an expensive, bespoke, over-the-counter product is that you can bet just on exactly what you want. The flip side is that if I go to Goldman and look for a product, they're going to be willing to take on a pretty big product for me.
Yeah.
How big can the trades get? I was playing around with it earlier, and I will say on some of the stuff, it seemed like my price was changing pretty dramatically if I just went up like 10x on some of the lower liquidity trades.
Yeah. So look, it's like with any financial market, right? If you trade an option on SPY versus an option on a low liquidity stock in the Russell 2000s, the liquidity is going to be very different, right? You're going to have more slippage in the latter than the former, right? And I think it's the same thing here. You get a long tail of events, the core events that a lot of people are engaged with and are trading. They're very liquid. You can take large positions on order book, and over time you can take it, via block trades or requests for quotes, other types of mechanisms.
It will also tell you what the slippage is too.
Immediately.
To your credit.
Yeah. No, I mean, we're very transparent. This is the whole point. Compared to the banks, you wouldn't even know what the price is because they're the ones that set the price.
Right.
You don't even know.
Price is the price.
The price is the price. And sometimes we would set things that are 40 cents wide and people don't know. It's like, hey, something that's worth maybe like 50 cents, we would charge 80 cents for it. But people wouldn't know because how would they know? There's no reference.
Right.
And this is the whole
Trade
point.
would already be done.
Exactly.
Yeah.
And this is the whole point of having an exchange because you can see everything transparently. You know how much price you're paying and how much price slippage.
It allows the user too, where you might want to say, I want to put a bet on this, but the market's not quite liquid enough.
Exactly, if they don't want to.
That also kind of brings me to a question, which is, how do you maintain what's on here? What is like your threshold? How do you get the ideas for what to put on here?
Yeah, sure.
And then how do you filter them out? Do you do it based on liquidity? You go, okay, that one's not taking off. We got to yank it.
Yeah, no, on the contrary. So the thing that's amazing about our model, and maybe I'll talk also for a second a little bit of history. So the large exchanges in the space are CME, which has been around, they acquired the Chicago Board of Trade, they've been around for 200 years, and ICE, who owns the New York Stock Exchange, and a few others. But I believe we're like a tech-first exchange and clearing ecosystem in the US. And I think what that means is that we can launch markets very, very fast. Our first market took us around 18 months to launch. Now we take 36 hours to launch a market.
Wow.
And so that allows us to launch lots of markets with low cost and at high speeds. And so what I say is like 50% of markets comes from our internal markets. We have a bunch of data sources that tell us what are the things that are trending, top of people's mind, like Boeing COO leaving. Yesterday was like obviously the bill around banning Congress members from doing stock trading.
Oh yeah,
that was big. And so these tell us like what are the things top of people's mind that we can list markets on. The other 50% is actually coming from our customers. They tell us, hey, I want to trade on these.
That's what I was wondering. Do you crowdsource?
Yeah, 100%. And why? Is because, well, instead of trying to figure out what people want, how about people can tell us what they want?
Could you even make it like a Roblox model where people offer up something and maybe take part in the actual liquidity if their idea succeeds?
Yeah, well, I mean, maybe potentially over time, but like for now, I think it really needs to go through the kind of regular, like we still need to kind of do the regulatory pipeline to list the markets.
Yeah. That'd be kind of cool though if you have a good idea for something.
It'd be awesome,
right?
To benefit
from it.
No, I think it'd be really interesting, and I think it's a good idea. But I think like, I want the world to go, like the thing that's so interesting is the world is becoming more dynamic. There's a lot more news. Things are evolving and shifting continuously now, right? Like the things that we cared about 2 weeks ago are not in the news anymore.
Sure.
We don't even talk about them,
Some would argue overflow.
Yeah, overflow. No, I agree, and some would definitely argue overflow. And like, there's a lot of things going on around us, and interest kind of up and ebb and flow all the time. And And I feel like the financial markets haven't quite caught up. They're still too static. You have a very static set of things that you can trade. Like, okay, sure, we can trade these stocks and these options and these bonds and these futures, but that's about it. I think the thing that we're offering over time is a dynamic way of listing markets. It's now there's a market for anything that's top of mind on the Wall Street Journal, on the New York Times, on CNN, on CNBC, on Fox, whatever.
But they do all have to be binary events, right? Because it has to
over
be
time,
able
it
to
doesn't
be
need
yes
to
or
be.
no.
It can be about anything. It can be yes or no, but it can over time be linear, which is like, it's all about the underlying.
So you're saying that potentially instead of just being able to buy a yes or no contract, there might be a
buy
spectrum
something
of
going
contracts?
up. Yeah, exactly.
But that's not something that's there
Not
at
today.
the moment.
It's coming in the roadmap, and I think we're expanding pretty aggressively.
That's very interesting.
Yeah, no, exactly. And I was saying, like, it's dynamic because it follows the news, but it's also diverse, right? There's a lot of people today that, I mean, maybe they're interested in Cisco financials or Tesla's financials, but a lot of people are not necessarily. They're interested in culture and what's going on there. They're interested in the economy broadly and what's going on in the news. They're interested in climate, politics, what bills are going to pass, why are they going to pass. And now there's a market for every single one of these people. There's a market for you. There's very tailored and customized for you. And I think that's where the word is going to go, towards customization, towards what people care about and the things that they have views on and opinions about and they want to engage with.
And it's so perfect also for the social media world too, when people want to say, oh, you believe something, you're opinionated, okay, put your money where your mouth is.
Exactly. And the reason is because when people have skin in the game, they're more truthful. People are very quick.
Such as the theory, yeah.
Exactly. People are very quick to speak and speak big when they're on Twitter when they don't have any skin in the game, but tell them to put some skin in the game and they get more careful and they get more objective. They get less biased. And this is the beauty of what we're building. And you talked about this, like people love pricing things and trading and forecasting and speculating. Yeah. And this is the beauty of what we're building. We're a mechanism to price any future event, anything in the future. Just price it and price what this probability, is it going to happen, is it going to not, and allow people to come and negotiate via trading.
Okay.
Based on what they think is going to happen in the future.
So what taught me about a little bit about kind of the business, because obviously you're private right now. What are sort of the aspirations? Can you give us any kind of insight as to volumes, scale that you've been growing at?
Yeah, absolutely. I mean, I think, the business has been growing phenomenally. It's been incredible. We, in the last 12 months, I mean, the growth has been really astronomical. Like we're seeing like 30% month-over-month growth pretty consistently. Any
particular verticals? Is it politics?
Well, economics, politics, anything that's top of news. You had like Sam Altman leaving OpenAI. A lot of people traded on that. Would he leave? Would he not? Anyone who owned the Microsoft position wanted to take a position. Claudine Gay leaving Harvard. Bill Ackman was like engaging with the market and posting about it and a number of things.
Yeah.
You had then you follow that with Boeing CEO leaving, TikTok ban. There's like constantly things that are going on in the news. And we had actually, for example, for Tesla, we have a long series of markets around what will deliveries be this quarter, and then those deliveries came out I think this week, and that was a big market. Will Elon leave as CEO? And that was like a big question mark with his pay package. And a lot of people like wanted to take that trade that he's going to stay or leave.
Yep.
But then they did it via Tesla stock. But that's just a bad trade.
Yeah.
Because you don't know.
Right.
You never know.
Yep.
Maybe he leaves.
A lot of people were surprised by the way the stock rallied on it.
Exactly. Yeah. Right. And so now there's a direct way to express that opinion where if you're right, you're going to make money.
Yeah.
There's no case where you're right but you lose money.
How does it work when I get the money in? How easy is it to get in and out? Where does your cut come in?
It's extremely simple. I mean, like any brokerage or any customer, and like, you just deposit and you basically engage with the markets and you start trading. We take trading fees like the New York Stock Exchange or CME. We take a small trading fee a small transaction fee when people are trading against each other.
Okay.
And it's an open marketplace. People are trading against each other.
Do you sell data as well? Is that part of the revenue?
We don't sell data today. It's actually all open source. Public news publications, brokers, others basically pull it and show it to their customers because it's, as I said, it's predictive. It shows you have a real-time trend, like a chart that shows how public sentiment is evolving over, will this thing happen versus this other thing happen, etc. So it's part of our mission. We want people to use the data. We want people to start listening to markets. Listen to markets instead of listening to pundits. Because markets are more truthful.
Right, yeah.
Markets aggregate the wisdom of the crowds. That's what the markets do very well. They price things very, very well. And so that's what we want. It's part of our mission, and we want to kind of push that over time. The other thing I was going to add to this is over time we're working with brokers, large financial brokers, to list the event contracts directly on your brokerage. So you can trade your stock, you can trade your bonds, you can have your 401k, and then you can take your positions on different events right in your brokerage. That
seems like it makes sense because part of the next kind of thing I was thinking about is, all right, visually, platform-wise, how much do you envision it becoming like logging into a trading platform? like a modern day charting? Does this data, I would imagine it lends itself the same way, like the charts might be a little bit choppier if they're binary outcome stuff, but I could still maybe do technical analysis on some of this stuff.
Yeah, I mean, absolutely. I mean, look, I think the way I would say it is like, well, the way I imagine over time is like you just log into your typical brokerage account, and you just trade right on your brokerage. The thing that you're used to, the platform that you're used to, the brand that you're used to, and that's, I think, the model over time. Now, some people, the hardcore traders, they're going to find all sorts of ways. Like it could be charting, technical. It could be pulling satellite data to forecast the weather. It could be pulling alternative data to like figure out, what Congress is going to vote on a bill, what's going to happen in this election. But the beauty of these event markets is they're simple. They're very elegant. You don't have margin. You don't have leverage. It's all funded up front. You put $100. That's the most you're ever going to lose. And if you're right, you make money. If you lose, you don't make money. And the simplicity is what we see the broad appeal to the kind of average customer that doesn't want to necessarily stay on their laptop and their screen all day. They just want to like take a position on something they care about and have a strong view on, and then check it every few days or every few weeks, and then without having to be kind of necessarily very active and having to have very long on-ramp.
And maybe getting distracted by things that ultimately won't change the actual event that they're betting on.
Exactly.
Markets do sometimes. What's the size I can put on it right now?
I mean, right now, depending on the event, you could put hundreds of thousands of dollars.
Really?
Yeah. And I think, obviously some events are smaller, some events are bigger, and it's growing. I mean, over time, it's getting into the millions territory, and it's growing very, very, very fast.
Wow.
Just to give you a sense, like, our liquidity over the last 2 to 3 months has grown something like 30x. And we're doing like a few million transactions a day now. So it's growing. It's been amazing.
Well, one that I might be interested in, the high temperature in Chicago today. There's some real specific ways you slice up the world. Very cool stuff, Tarek. Thanks for explaining it to us. And best of luck, too.
Well, thanks a lot for having me, Oliver. This was awesome.
Yeah, very cool conversation and a very interesting platform. It's something that any trader, investor, anyone who's got an opinion, which I've heard is basically everyone will enjoy. Tarek Mansour is the CEO and co-founder of Kalshi. That's it for Market Overtime. Thanks for tuning in. Make sure to check out all our episodes on the schwabnetwork.com and on our YouTube page. I'm Oliver Renick. Thanks for watching.